In this video, we're going to learn how to profit from the FOMC press conference and how the banksters play dirty tricks on retail traders. The FOMC press conference will often set a long or a short bias for hours or days, but the problem is the greedy bankers don't want you to get a slice of the pie, and they play the same trick almost every time. So what is it that they actually do? Well, imagine a trading range before FOMC. Here's a diagrammatic representation. Now we have a number of swing lows here where short-term traders' stop losses will reside. How do we know this? Because traders always put their stop losses above or below price swings. During the FOMC press conference, the initial move will be the fake move. There's a few things that banks and hedge funds want to do here. Number one, create confusion, and number two, most importantly, create liquidity for their buy orders. So the first thing they do is quickly run the market down to take out traders' stops, and traders who are long have to sell to get out the market. This also causes trigger happy traders to FOMO in short. In other words, there's a ton of traders going short and they provide liquidity for the banks and hedge funds and institutions buy orders. This action of running the stops and reversing quickly gives a momentum effect, a bit like a coiled spring, and this is why you often see a very sharp V reversal take place. The reversal will often stop when there's a lack of volume. On this Dow Jones 30 chart, look at the fast reversal here. The market move turns around quickly when there are low volume areas on the chart. Here we see it also shooting through an area of low volume quickly. In other words, low volume equals not as many orders to fill, equals fast moves or reversals. But that's a topic for another day and we cover it in detail in my advanced course. So we're going to look at 9 EURUSD examples that took place during FOMC conferences over a year. So we're going to look at July 2021 to July 2022. And be aware that there weren't FOMC conferences every month. Sometimes they missed them. So let's start with the July the 27th press conference. Here's the EURUSD 5-minute chart. And you can see what happened here. The market made a big rundown during the FOMC press conference and then immediately it reversed, and this is exactly what we saw on the diagram. They ran a few stop losses here, so you would have had stops below these swing lows and even below here. Didn't quite manage to run the low here, but seeing this railway track candle pattern or a V shape on a lower time frame would have been enough to confirm that you should go long. Here's the June the 15th press conference, and again on the EURUSD 5-minute. What you got here, you got some initial wicks. This may have been on the rate announcement, and then you got an initial wick here, and then you got a V shape here on the FOMC press conference. Not as clear as before, but if you go to the 1 hour, it becomes a lot clearer. You see a big spike is taken out. Basically earlier it took out this support level, then it took out the stop losses below here, big spike, and once you see that going up again, you could have got long, and then it pulls back and then it continues on up again and even uses this level here as support. So basically what we're saying here is it set the bias for the coming hours, and in this case the coming days as well. Here's the May the 4th press conference, and again big spike down on FOMC, and as Powell continued talking, probably in the Q&A, that's what normally happens. Gets to the Q&A, he's asked tricky questions, and then the market reverses here. So you've got this V shape here, and once you see the V shape you could have gone long, and the bias was long. And don't forget, it took out the stop losses here, so you would have had stops below these swing lows here, which was minor support, and below all these. It didn't quite get to the low here, but they got themselves enough liquidity to get their buy orders filled. Here's the March the 16th press conference. Again, the EURUSD 5-minute chart. Now look what happened here. You got the V shape. Okay, you did get a number of wicks here, but once you saw that V shape, then the bias was confirmed long. It took out these swing lows here and even this one. So it took out a number of stop losses. It would have taken out this support level as well. And this was probably the rate statement here. Here's a 15-minute. Again, on the 15-minute, you see it as a V shape. Took out support here and then it went up, and the 1 hour again. So you can look at multiple time frames to see this. On the 1 hour, what you got here is a gap down, and then the candle closes as a bullish candle when the hour closes, and that would have confirmed to you the bullish bias. Okay, here's the January the 26th press conference. Now initially what we had here was a rate statement, and the rate statement took out this swing high here, which would have taken out stop losses, and it also took out this level here as well. Almost came into resistance here, and then you got the V shape. So coming up to the press conference and throughout the press conference, you then got a V shape, and that would have been enough to confirm the short bias, and you could have shorted once you saw the V. Depending on how confident you were, you could have even shorted the lows here. I don't really encourage breakout trades, but once you got to here, it was fairly obvious it was going to continue on down. Okay, December the 15th, again, EURUSD 5-minute chart. Again, same as before, you got the rate statement first, gave a huge spike. Then you got the V shape throughout FOMC. It couldn't take out the low of the rate statement, and that's very telling in itself that it couldn't take out that low. And then once you saw this V shape, you knew the market was going to continue on up. Here's a 15-minute chart, and you can't even see that rate statement spike here. All you can see is a V shape. So looking at higher time frames, you can see what happened here. There would have been stop losses below this range here. The market made a V shape. The institutions, the banks got their buy orders filled, and then the market went up. Here's November press conference 2021, and it was a bit of an odd one here. We had this spike on the rate statement, then we had a V shape on the FOMC, and it did continue up. So if you saw that V shape there, you could have got long, but it didn't really last for that long before turning around. So it's a bit of an oddity there. The FOMC was also an hour earlier than the usual time, so you're not always going to get it right. Okay, September. Now here we had a big spike on the rate statement. It took out all the stop losses here, but then on FOMC, during the FOMC press conference, again we got that V shape here, took out the stop losses above. So this is really a whipsaw, but if you knew what was happening and you were waiting for that V shape on the FOMC, then the market continued on down. Here's the 1 hour. A lot clearer on the 1 hour. You had this spike. It took out that high where there would have been stop losses. It then bounced that resistance here, that swing low there, and then it went down. Now what happened here is it came back very deeply, but then it continued the trend into the next days. And again, you can see here we've got this stair-stepping action going on, which is also confirming the bearish bias. Okay, here's a July FOMC, and very sharp spike here on the rate statement, and then the FOMC announcement itself made a spike, and on a lower time frame you would have seen a V shape there. So once you've seen that, they've taken out all the stop losses already on the rate statement. The FOMC couldn't get any lower than that, and that really is a bullish sign that it's going to go up. Here's the hourly, and on the hourly you just got a big wick, and then it's obvious that it's going to go up, and they cleared out some stop losses here into demand. And that's it. That's a year's worth of FOMC statements. So it's pretty obvious what happens every time. The banks and the institutions reach into liquidity. They get everyone going the wrong way. They reverse it. They've got their orders filled. And that sets a bias for the coming hours and even the coming days. If you enjoyed this video, check out my advanced course. We cover a lot more in detail. We'll recap on strategy foundations, including supply and demand, impulses, price pivot zones, bull and bear traps, and engulfs. We'll also look at my proprietary patterns, which is the SDBT flow pattern and the SDBT target method. You'll learn about bias, flow, and market structure. And as I say here, don't trade without understanding the directional bias of the market. And we'll combine volume profile with the strategies I teach, and we'll look at liquidity and how to combine them with price pivot zones. And finally, we'll also look at the day trading strategies that produce reliable setups for US equity indices almost every week. So take a look at the advanced course, and if you enjoyed this video, look out for more. Subscribe to this channel if you haven't done, and you'll be notified as soon as I post something new.